Interest rates are one of the major issues in the coming election, even though both sides say no government can guarantee a rise or a fall. But with the economy steaming ahead, the Reserve Bank may soon be applying the brakes. So should we be fixing our loans with a low interest rate now? Lexi Hamilton-Smith looks at how a pre-Christmas rise will affect the family budget.
News of an impending rates rise has sent a nervous tingle down Lisa Addison's spine.
I mean, they've been very stable for quite some time, but the worry is always there that they're going to go up.
A single income family, even a 1/4% hike will leave them wondering whether to fix or not.
Totally confused. Totally confused.
Either way, there will be pressure on the family budget.
Really watch our pennies. Really watch our pennies.
We asked 3 experts to do some crystal ball gazing to see if voters living in mortgage belt suburbs really should be worried.
Yes, we may be facing a 0.25% increase by Christmas.
I suppose a cynic would say not before the election, but probably immediately after the election.
I think that our feeling is that rates will rise.
So the experts all agree rates are on the way up, but how high they'll go, no one really knows. But what they do know is now is the time for all of us to tighten our belts just a little.
No matter how low, a 1/4 or even a 0.5%, it still means borrowed money will cost more to pay back. So what to do? Is it time for homeowners like Lisa to lock in for 1, 3 or 5 years?
It's quite scary because I really don't know what to do.
Well, Australian Financial Services Phil Burke says fixing a loan is certainly an option, but it does have drawbacks.
I tend to prefer to have rates not fixed, mostly because you have more flexibility at the rate that you repay the loan. Sometimes with fixed loans you can't repay at the rate you like because they don't allow prepayments.
Hill Ross Financial's David O'Brien says if money's tight and borrowings are high, it could make good sense to at least lock in part of your loan.
It may give them peace of mind if they were to fix a portion of their loans, perhaps 30%.
While one of Queensland's biggest brokers, Mortgage Choice, says if you fix on the way up, it can cause financial heartache if rates then come down.
The fixing is comforting for them in the short term as the rates are rising, but as the rates are coming down, it then becomes a little bit of a noose around their neck.
While last December's back-to-back hikes did what the Reserve Bank intended, slowed the property market, they did little to curb consumer spending. We now have a credit card debt of $27 billion and rising. It's thought an end-of-year rise may just convince debt junkies to kick the habit.
The worst thing they could probably do is go into further debt, particularly consumer debt.
So according to our 3 money men, while there's no need to panic, it's certainly time to take stock. Look at what you owe now and what you owe if rates rise.
So that they can act and plan early in the piece rather than be caught out unawares.
Just be careful, make sure that there's enough fat in the repayment.
Start tightening the belt.
If they do go up, how high could they go and how quickly?
We're going to be leading somewhere up to 8% by probably the middle of next year.
So maybe it's time to start paying in a little bit extra while rates are still down.
Pay in as much as you can your mortgage. You don't necessarily always need to pay the minimum amount. Pay in as much as you possibly can.
And there are other ways to ease financial pain. Mortgage Choice has 5 top tips. First, consolidate your debts. Fix part of your loan, reduce your mortgage with a lump sum, redo your budget and cut back spending. Buy what you need, not what you want. Borrowers like Lisa believe rates will be one of those hip pocket issues that'll sway voters on election night.
You know, it's really hard, and I think that's something that they're going to have to be really aware of, that, you know, Mrs. Joe Public in the suburbs, you know, we worry about where the money's coming from and what's going to happen because it's our home. And, you know, you don't mess with your home.